Hello everyone, this is Latish. In today's video, I'm going to share why SIP in mutual fund FoFs makes more sense now, especially looking at how gold and silver has been performing. Silver prices have exploded this year, up almost 40% in 1 year. Gold, rock solid as always, giving stability when markets look uncertain. But here is what most people don't realize. Even though silver and gold prices are going up, many ETFs that track them are trading at 8 to 15% above their NAV. You can see the screenshot of all the ETFs which are there in the market and how they have been performing and are running at much higher premiums. That means the ETF itself has become more expensive than the metal it holds. And if you're investing through ETFs directly, this premium can actually eat into your returns. Let's understand why and why SIP through fund of fund mutual funds is a smarter way to build your metal allocation. Hi everyone, my name is Latish and on this channel, we simplify how we can invest smarter and with proper understanding. No hype. But a disclaimer, these videos are for educational purpose only. If you're looking to invest, please do consult your financial advisor and then invest in any of these products. So today we will decode what's causing the current ETF premium in gold and silver, how it affects your investments in them, why lump sum investments right now are very risky, and how SIPs in fund of funds make it effortless to invest consistently without worrying about the timing. So before we jump into today's topic, here is something useful for all mutual fund investors. If you're planning to start your SIP in gold or silver fund of funds, you can do it easily through Rupeezy, a platform trusted by lakhs of investors for over 20 years. It's 100% AMFI and SEBI compliant, free account opening with zero maintenance, and the best part, you can set up your SIP auto debit in just few clicks without manually buying ETFs every month. Along with that, when you open your Rupeezy account using the link in the description, you can connect directly with me for guidance on mutual fund selection, SIP setup, and even upcoming NFOs, which I have already shared in multiple videos in this channel. So if you want to start your gold or silver SIPs the smart way, open your Rupeezy account today using the link below. Now let's talk about what's happening with gold and silver ETFs and why premium matter more than ever. When you buy an ETF, let's take an example of Nippon Silver Bs or HDFC Gold ETF, you are buying units that represent actual metal held by the AMC. The NAV or INAV is a true value of that holding. But ETFs trade on NSE and BSE just like stocks. When demand spikes and few sellers are available, the market price rises faster than the NAV, and that's called the extra premium, which you will be paying above the NAV. For example, if the NAV is 150 rupees and the ETF trades at 165, that's a 10% premium which you are paying. You are basically paying 165 rupees for a 150 rupees worth of silver. So what's happening right now? As of 9th of October 2025, Nippon Silver Bs is running at 9% premium, HDFC Silver is at 12%, Axis at 14%, and Tata Silver ETF is as huge as 15% premium. Why is it happening? Because silver's been the best performing commodity this year and investors are chasing it. But ETFs have limited supply. AMCs can't create new units instantly. So demand is greater than the supply. So that in turn increases the premium. Gold ETFs on the other hand are older and far more liquid. Premiums stay around 1 to 3%. Silver ETFs are newer and smaller. Even a 50 to 100 crore of inflow can move prices sharply. That's why premiums here are much higher and more volatile. Now here is where mutual fund investors also have an impact. When you invest in silver FOF, which is fund of fund like Edelweiss, Kotak or ICICI, for which I have already done a detailed video, you can check out those videos and the links are in the description. The fund invests in these ETFs. So if the ETFs is already at a 10 to 15% premium, your fund of fund end up buying the inflated prices. If the premium later corrects, the fund of fund NAV drops, even if the silver itself doesn't move. It's like buying property during a bidding war. When the excitement fades, prices normalize. Let me share an example for you to understand. Let's say your fund of fund mutual fund invests 10 crores when the ETF trades at 10% above NAV. You effectively get 9.1 crores worth of silver exposure. If the premium goes back to normal, you lose almost 9% on paper without silver falling a rupee. That's how misleading ETF premiums can be. So how is this going to affect your investment style and why lump sum is a risky option currently? So if you're planning to put a large lump sum in silver ETFs right now, you are basically entering at the peak of demand. Even a small normalization can make your NAV fall. Lump sum is equal to timing risk plus the premium risk. That's going to be a double impact on your investment. So here is where SIP comes to rescue. Now let's flip this around. Instead of trying to time the gold or silver investment, you should simply start an SIP. SIP takes care of two big issues. It averages your entry price. Some months you buy at a premium and some at discount. It eliminates the emotional timing game. You just invest monthly and let compounding do its work. And this is where mutual fund of funds beat direct ETFs hands down. So why do I say fund of fund SIP is better than ETF? Here is something most investors miss. Yes, you can buy ETFs directly, but doing SIPs in ETFs is manual. You need to log in, place an order every month, ensure price limits, and also ensure that you transfer the money to the demat account when you're investing in it. In contrast, when you start an SIP in a silver fund of fund or gold fund of fund, it's completely automated. It auto debits from your bank account. AMC handles purchasing and rebalancing. You also get fractional units and benefit of compounding inside the fund. And you don't have to monitor daily the premiums. So for retail investors who want long-term exposure, fund of fund SIPs are the cleanest, most hassle-free way to build gold and silver allocation. Of course, there is a disadvantage that the expense ratio is slightly higher for fund of fund and you will get much cheaper for the ETF. But the hassle of investing in ETFs outgrows the overall expense ratio which you will be paying. Now, if you're wondering, okay Latish, I understand SIPs are better, but where do I actually invest? Let me make it simple for you. Here are some of the popular gold and silver fund of funds which are available right now in the market. All of them invest in their respective ETFs. In terms of gold, you have HDFC Gold Fund, ICICI Prudential Regular Gold Savings Fund, which tracks the ICICI Gold ETF, Kotak Gold Fund, which is linked to the Kotak Gold ETF. Then you also have the Nippon India Gold Savings Fund. In terms of the silver fund of funds, you have Edelweiss Silver ETF Fund of Fund, which is one of the largest in the category. Then you have Kotak Silver ETF Fund of Fund, which has a consistent AUM growth, and ICICI Prudential Silver ETF Fund of Fund, which invests in ICICI Silver. Along with that, you'll also see that UTI has a Silver ETF Fund of Fund. This has simple options for SIP investors. Along with that, I have also posted recently an NFO, which is from Kotak, which has a balance of gold and silver. You can start an SIP in any of these fund of funds directly through the Ripisi link which I have mentioned in the description. It is just like a regular mutual fund SIP. No demat, no manual orders, and the amount auto debits monthly. So both gold and silver deserve a place in your portfolio. Gold for stability, silver for growth potential. A balanced approach of 5, 10 or 15% allocation across both gives inflation protection and diversification. But remember, it's slow compounding hedge, not a get-rich trade. Treat it like a marathon and not sprint. So to sum it up, silver ETFs are running hot with 10 to 15% premiums. Gold ETFs are steadier, around 2 to 3%. Lump sum buying right now is riskier because you have a premium attached to the ETFs. SIP in FoFs is smarter, automated and disciplined way of investing. Don't chase the headlines. Build your gold and silver wealth slowly, the SIP way. And ensure it is not the only allocation which you have in your portfolio. So that was the video today about investing in gold and silver investments on why lump sum is not the best option currently. A disclaimer, this video is created for educational and awareness purpose only. It's not investment advice or recommendation to buy, sell or hold any mutual fund, ETF or securities. Please do consult with your financial advisor before making any investments in any of these assets which I have mentioned. If you're looking for help in terms of creating a plan and investing through me as a mutual fund distributor, you can always reach out to me at the number which you see on the screen. If you did like this video, hit the like button, share it with your friends and do subscribe to our channel for more such videos. Thank you for watching and have a good day.